All right, today we're going to do a technical deep dive on Ford Motor Company. Why? Because after a really massive surge, the stock is at this critical crossroads, and it's sending out some completely conflicting signals. So what's really going on under the hood here? Let's break down the data.
So check this out. On October 24th, Ford stock just rockets up over 12% in a single day. I mean, that is a huge move. And it was driven by an absolute explosion in trading volume. We're talking nearly 300 million shares changing hands, which is more than triple its normal daily average. You see something like that, you have to take a closer look.
And that right there brings us to our big question. Is this a powerful, sustainable breakout that's signaling even more gains are on the way? Or is this just a short-term sugar rush? A rally that's running on fumes and about to hit a brick wall. Let's follow the clues in the data and see what story they tell.
Okay, first up, let's decode the bullish signals. Because honestly, there is a mountain of evidence that suggests this rally has some serious strength behind it. And it all starts with some of the fundamental tools of technical analysis.
First, we've got moving averages. The easiest way to think about these is that they smooth out all the day-to-day noise and choppiness so you can see the stock's true trend. By looking at averages over short, medium, and long periods, analysts can get a really complete picture of what the market is thinking. So, here's the crucial point. Ford's current price is sitting above every single one of its key moving averages. We're talking from the 5-day all the way out to the 200-day. The price is on top. That's a green light across the board, a comprehensively bullish signal showing strength across all time frames.
Next up is an indicator called the MACD. It's basically a way to measure the momentum and strength of a trend. When the MACD is positive and it's rising, it tells you that the upward momentum isn't just there. It's actually getting stronger. It's accelerating.
And for Ford? Well, the MACD is just screaming bullish. It's positive, it's above its signal line, and the momentum value is strong. This confirms that what we're seeing isn't just some random price spike. There is some serious, powerful momentum behind this move up.
So let's just recap the bullish case real quick. We have the price above all the moving averages. We have a positive MACD confirming that strong momentum. We've got that massive trading volume. And other indicators, like the ADX, are also confirming the bulls are in control. I mean, on paper, this looks like a completely unstoppable rally. But is it?
Now we have to look at the other side of the coin, because hidden inside this overwhelmingly positive picture are some very clear and very potent warning signs.
The big question here really is this engine running too hot? A powerful rally is great, but if it overheats, if it redlines, it can lead to a really sharp and sudden reversal. So let's take a look at what the gauges are telling us.
And our first gauge is the Relative Strength Index, or RSI. The best way to think of this is like the tachometer on a car's engine. It measures how fast the price is moving. And a reading above 70 usually suggests the stock is overbought, meaning it might be getting pushed too hard and is due for a cool down.
And yep, here's our first big red flag. Ford's RSI is currently sitting at 75.51. That is well into that overbought red zone. This is a major warning sign that this buying frenzy might have just gone too far too fast.
Next up, we have Bollinger Bands. You can think of these like the bumpers on a bowling lane for a stock price. They create a channel, and over 90% of the time the price stays within these bands. So when it actually breaks out, it's a pretty extreme event.
And here is our second warning sign. Ford's price hasn't just touched the upper Bollinger Band, it's punched clean through it. This tells us the stock is really overextended and trading way outside of its normal statistical range. And that just increases the probability of a pullback, a reversion to the mean.
The source analysis puts it pretty bluntly. It says that despite all that positive momentum we just talked about, the overbought readings from indicators like the RSI suggest a very real risk of a correction. And this is the central conflict we need to figure out.
So how in the world do we reconcile these two completely opposite stories? On one hand, you have incredible strength. On the other, you've got these clear signs of exhaustion. Let's put them right next to each other and see what's what.
And here it is, all in one view. You see it, right? On one side, you have all these bullish signals pushing for a powerful uptrend, but on the other, you have multiple warning signs just flashing amber, like the overbought RSI and the Stochh RSI. It's like the market is flooring the accelerator and slamming on the brakes at the exact same time.
So, what does this all mean for the trend sustainability? Well, the underlying trend strength itself, measured by that ADX indicator, is actually moderate and pretty healthy. This suggests that the broader uptrend could continue.
But that extreme short-term overextension implies that this specific rally probably needs to take a breather, to pause and consolidate before it has any chance of going higher.
All right, so let's translate all this technical jargon into a strategic outlook. Given all these conflicting signals, how might you actually approach this situation from a trading perspective?
Well, the analysis lays out a few key levels to watch. For the bullish story to stay alive, the price really needs to stay above that key support level of 1170. If it breaks below that, it could trigger a much deeper correction. Now, strategically, this means different things to different people. A short-term trader might see these overbought signals and think, hey, maybe it's time to take some profits. A long-term investor, on the other hand, might see this as a signal to just wait for a dip to get a better price.
And all of this leaves us with one final and really crucial question. In a market battle like this one, when incredibly powerful momentum runs headfirst into crystal clear signs of exhaustion, which force is going to win out? The answer to that question is what's going to determine Ford's next big move.